Hey, all, welcome back to your home loan interest rate update for January the 30th, 2024. It is now 3:24 p.m. Central Time. Couple of big things I want to point out to you. First of all, the Federal Reserve is meeting right now, and they will make their announcement to what they're going to do with the federal funds rate tomorrow. I'm also going to show you here a great article that you can show to your buyers about why they need to think about buying now and not trying to wait. So first of all, the Federal Reserve again is going to be meeting today. It's a two-day meeting. So they meet today and they make their announcements tomorrow. So they're going to be talking about whether they're going to either keep the same, increase, or decrease the federal funds rate. Now, we've watched the federal funds rate increase year over year for the past 2 or 3 years and going all the way up to about 5.5% right now on the federal funds rate. That's giving us an 8.5% prime rate. That is why you're seeing things like your credit card payments, your auto loans, and your home equity lines of credit go up so high from where they were a few years ago. Now, what we're hoping is that we're going to start to see the Federal Reserve reduce the federal funds rate and bring it back down to a little bit more moderate level. Right now, it is rather high because they're trying to constrain the economy to not have inflation continue. They're trying to reduce inflation. Now, once they start bringing the federal funds rate down, it's not that they're lowering home loan interest rates. You need to understand, they are not controlling home loan interest rates. But when they bring down the federal funds rate, it is them confirming that they believe that inflation is now under control. And that is what allows home loan interest rates to come down, because bonds do not like inflation, and mortgage-backed securities are bonds, and bonds, mortgage-backed securities, are what create the pricing for the actual home loan that we sell, the 30-year fixed, conventional FHA, VA, and everything else. So you need to understand it does make a big difference. And tomorrow we're getting the announcement from the Federal Reserve. We expect them to leave it alone, not increase it, not bring it down. But what we are paying close attention to is the wording. So are they going to say, well, we're going to leave it alone, but we're going to have our finger on the trigger for bringing it up if anything gets out of control? Or are they going to say, hey, we're leaving it alone, and we hope that it continues to show signs of cooling before we can start talking about bringing the federal funds rate down? You see how that gives you kind of two different flavors? That's what we are going to be listening for, and that is an important report that's coming out tomorrow. It will impact home loan interest rates immediately, one way or the other. We might not see a big movement one way or the other, but there will be some effects to the words that are spoken tomorrow about noontime. Okay, that's the federal funds rate and the Federal Reserve. The next thing I want to talk to you about is what's going on with buyers right now, talking about that they want to wait for home loan interest rates to come down before they go out and buy a house, and why they should not be doing that, especially right now when we expect home loan interest rates to come down very soon. This talk that's going on about home loan interest rates going down soon is motivating people. More and more people are saying, okay, it's about time. It's about time. Let's get ready to buy when? Spring and summer. The spring and summer selling season is probably going to be very hot. That would not be good for our buyers, because while we expect more buyers to be ready to go, where are we going to get these extra houses? Are we expecting more sellers to be ready to go? Are there going to be more new construction homes being completed? We don't show that in our forecast. So let's take a look here and see if you want a little bit of more confirmation of this. Let's jump over to another screen here. Take a look at this. This is from Housing Wire. It says, Fannie Mae economists offer housing market outlook, potential timeline for interest rate cuts. Now, this talks a lot about the interest rate cuts that we just discussed a moment ago, but look at this paragraph here. While Fannie Mae expects mortgage rates to drop to below 6% by the end of the year, the government-sponsored enterprises also forecast that if there isn't significant supply growth and buyer demographics remain strong, home prices will once again rise. Okay, so what we need our buyers to understand is that if you buy a house for $800,000, let's just go more middle of the road, $500,000, and you have an 8% interest rate, and you buy that house, okay, rate's a little bit high. Maybe you're not real happy with that. Home price is probably about as high as somebody wants to go, for instance. Well, guess what? Once you buy that house, if interest rates come down, you can refinance your home loan interest rate and bring that down. But if you buy a house, there's nothing that you can do about bringing the purchase price down. The only way you can change the purchase price is if you were to sell that house to go buy a different one. That is the amount of investment you have in your home, in the home that you live in, or the investment property, or whatever it is that we're talking about. So you can remember back in years of like 2020, 21, 22, when someone had a 5, they refinanced to a 4. And then rates kept on going down, they refinanced to a 3. Rates kept going down. I mean, I've got people that I was refinancing into the 2s. Now, that's something that these people lived in the same house, and it didn't change the price point that they bought the house for, but they were able to bring their monthly payment down, down, down as they rode the interest rate down. Now, as I mentioned, right now is especially important because we do feel, and many people feel, I mean, I don't really know anybody that doesn't feel, that we have reached the peak of where home loan interest rates are going to be for this upcycle. Now, how fast we go down from there, we're not sure. That's debatable. But if we feel that we are at the peak and we're going to ride it down, then if you buy a house today at the interest rate here and the price here, your interest rate can come down and your price can stay the same and your monthly payment gets lower. If you don't buy now, what's going to happen is as the interest rate begins to come down, home prices are going to begin to go up because the demand is going to come out of the woodwork. The buyers are going to come out of the woodwork, and you're now going to have 20, 25, 30 people at an open house because why do we think that we're going to have more inventory? What makes us think there's going to be any more inventory? Unless new constructions get finished, or I don't know, for some reason people move out of the neighborhood that you want, I don't see where there's going to be a lot more inventory available, but yet interest rates going down, which makes the house more affordable. And what happens? Home prices go up. Okay, so there's a lot of recipe for home prices to actually go up substantially in this year, 2024, if you're not careful. You better get in there while you can. As a matter of fact, 2023, which everyone felt like was a very, very difficult year in the real estate industry, we are now showing we ended up, according to the Federal Housing Finance Agency, at about a growth rate of home prices of about 6%. Okay, so even in 2023, there's so much demand out there that home prices actually went up with interest rates in the 8s. Imagine what's going to happen when they're in the 5s. All right, so let's take a look and see where we're at right now on our interest rate. Go over here, jump into our scenario, Brent Bruce Daily. Now, yesterday we were looking at about 6.625, something like that for our scenario, our very low qualified 30-year fixed conventional home loan. Right now, look at that. 6.5. Okay, PRMG is now offering 6.5%. Again, when I say PRMG, we can get that as a mortgage broker. You can't go to PRMG and get that. You have to go through a broker like Rancho Capital myself. Let's take a look here. 6.5 is with no points. Let's open this up. Make sure you see the parameters. 25% down, 800 FICO score. Very well qualified customer. All right, let's see what happens if we open this up. And what if we want to pay a point? For a point, you're getting, pretty close to that 6%, 6.125%, somewhere in that range. And let's go ahead, and we didn't do this the other day, but let's take a look at the largest mortgage lender in the United States, which is United Wholesale. And it looks like they're a little bit more expensive at this time. So a 0-point loan is actually 6.99. All right, so we may not go with United Wholesale today. We might. They're still going to be one of the fastest as far as processing turn times. So make sure you give us a call. Let me know what it is you want to talk about, if I can help one of your customers, and go ahead and forward this information to your buyers to help them understand now is the time to buy. This is not a sales tactic or anything like that. Home prices are going to go up when interest rates come down. The amount of buyer desire is tremendous. The amount of buyer demand is not as high because demand means they're ready to buy a house right now. Desire means they want to buy a house as soon as they can. They're going to go very, very quickly from the desire category to the demand category if interest rates go below 5, even in the low 6s. And we're in the mid 6s now. So it is going to heat up. We're going to have a big year, I believe, this year, as long as we get some inventory. Let me know your thoughts. If you have any questions, make sure that you reach out. And of course, I'll put a link down below. Go ahead and have your customers click on that, get pre-approved, and give them the best rates we can get. Have a good day.